We've obviously had a really interesting couple of years. We've seen rents climbing pretty rapidly. We've seen vacancy rates shrink down pretty low.
We're seeing major population growth forecast for Melbourne, which is about 1 million people in the city alone. The vacancy rate in the rental market is remarkably low.
Very tight.
16-year low, about 1% across Australia. And in Melbourne, we're tracking just under 3% at the moment, but coming down rapidly towards 1%. It means rental growth. It means a shortage of accommodation, which is great for investors.
We're sort of seeing a bit of a change in household structure as well. A lot more people living by themselves, maybe having less children, having children later. How do you think that BTR works for that group? And how can investors kind of capitalise on that social change?
We're always looking at who the profile of the renter is. Getting married later in life, having kids later in life, double earners in households, a lot of women working, obviously. We've got a huge surge in population that's occurred in the very central area of Melbourne. The majority of the stock that's coming through is city centre, city living, high amenity, high service. Because that's what the customer wants. What our clients are finding on the marketing and the operations side is it takes a bit of explaining what this thing is. Because the tenant is, or the customer as we call it in build to rent, is a bit cynical about the customer-tenant landlord relationship. So there's a big education going on to fill these buildings up and to explain to the customers how much you get that's so much better in a build-to-rent building.
What about ESG? Is it a big thing in BTR?
It's huge. I mean, the investors behind the projects are institutional investors, and I don't need to tell you that those institutional investors are managing money on behalf of their clients and their investors, and ESG is front and centre. If you have not got sustainable design, not just the construction sustainability side, but also the operational sustainability side in your development, you actually won't be able to get it funded. It's a mandatory requirement. Location, the investors are thinking really long term about these buildings. A different way to think about ESG is the use of raw material of land, i.e. urban high density living is regarded as preferable to sprawling suburbia. Access to public transport is critical, less reliance on cars. There's the sort of social mobility side of build to rent as well, connecting communities up within the building. Loneliness becoming more of a problem during COVID, people being locked down, locked into apartments. Connecting up people within these communities comes through really, really strongly in the brands that are emerging.
How do you think Melbourne, which is already, a pretty spread out city, is going to kind of accommodate this huge amount of population growth we're expecting?
About 80% of new arrivals into Melbourne, they live in apartments. So the CBD area is typically where new migrants into Australia, where they start. So that's for various reasons. One, because they want to enjoy and get to know the city centre. Access to work opportunities for sure. They have human connections. They want to live amongst people that they might know already, or family or friends. So you get clustering of people into the CBD, hence such a vibrant Chinatown in Melbourne, for example. And then the other factor, of course, is that it's not always that easy for new migrants to be able to buy. And that's partly due to the age profile of the people. Most new migrants into Australia are under 40. When you come to a new country, as I've discovered, you start again with things like credit ratings. The Aussie banks, they don't look so closely at your 20 years previous experience. So the people that come into Australia, they're not naturally buyers that quickly in a housing for sale market, which is cooling off. But that's not to say you can't create other types of rental accommodation, purpose built, purpose design, build to rent, which is serving a more suburban location.
You mentioned that sort of overseas market. I'm always so surprised by just how large that build-to-rent market is in the US. And also kind of keen to hear about your experience in the UK and how you think that might play out in the Australian market.
One of the key themes I've found since I've come here is that it's described as alternative or new. It might be a new sector in the Australian context, but globally in the US it accounts for about 40% of investment volumes annually. So that's across all real estate asset classes, offices, retail, logistics, residential. It's a huge market. About 22 million units of multifamily in the US alone. And then in Europe, build-to-rent multifamily was about 25% of volume. What we're seeing for sure is those investors who are already exposed and experienced to the sector in other markets, they're coming to Australia because of the mega trends we described earlier. Their analysis and their thinking around risk and maturity is a bit different, I find, to some of the other investors who perhaps are a bit more conservative or less experienced in the sector.